Everyone. We just had the board meeting for approving the accounts of HDFC for the second quarter ended September 2020. I thought what I'll do is over the next 15 to 20 minutes, maybe run through some of the key questions and key highlights of the results. And then maybe if there are a few questions that people want to ask, then I can answer those questions. So we had a very good quarter in terms of growth. And the growth the demand that we saw for housing loans, individual housing loans, was a lot faster, or the pickup was a lot faster than what we had originally envisaged. So for example, for the second quarter, for the full quarter, July to September, our total individual loan disbursements were 95% of what they were in the second quarter of last year. But again, if we break down that month-wise, July, August, September, you'll see that with every passing month, the business kept getting better and better. So for example, for September, our individual loan approvals were higher by 31% compared to September of last year. And our individual loan disbursements were higher by 11% compared to September of last year. October was an even better month, and honestly much better than what we had we had expected. Our loan approvals were higher by as much as 58% compared to October of last year, and our individual loan disbursements were 35% higher than October of last year. But let me add a caveat over here, which is that October of last year, October of 2019, was a relatively weak month. And if we were to average out for the quarter, October, November, and December for the 3 months, and then compare the growth for the month of October, then the growth would have come down. The disbursement growth would have come down from 35% to about 22%. The loan book stands at 5,40,270 crores as of 30th of September. And the net increase that we saw in the loan book in individuals was 10%, and overall was 11%. Non-individual growth was 14%, but non-individual growth happened largely in the first quarter and relatively lesser in the second quarter. During the quarter, we sold loans aggregating to 3,026 crores of rupees, and in the last 12 months, we have sold loans aggregating to 14,138 crores of rupees. The quantum of loans sold in the current year is lesser than what it was in the previous year. Had we not sold these loans, then the growth in the individual loan book would have been 15%, and similarly, the growth in the total loan book would also have been 15%. As of 30th of September, we had a total of 64,974 crore rupees worth of loans, which have been sold by us, but which we continue to service. Our focus on affordable housing continues unabated. And if you look at the first 6 months of this year, 18% of our loans in terms of value and 35% in terms of numbers were to customers who were in the economically weaker section or in the lower income group. Our average loan size for customers in the lower income group was 18.2 lakhs, and for customers in the economically weaker section was 10.7 lakhs. If you look at the breakdown of the loans outstanding on 30th of September between different categories, then individual loans constituted 75% of the outstanding loans. Construction finance constituted 11% of the outstanding loans. Lease rental discounting loans constituted 8% of the outstanding loans, and corporate loans constituted 6%. If, however, we were to look at incremental growth, that is the growth during the quarter, if we take the second quarter, that is September numbers, and then compare it with the June numbers, then 113% of the growth in the loan book came on individual loans, and non-individual loans actually showed a negative 13%. If we take the full 6-month period, then 53% of the growth in the loan book was on individuals, and 47% of the growth in the loan book was on non-individual loans. As we told you before, we continue to hold the investments in our subsidiaries and associate companies at their historical cost, and we do not mark to market or fair value these investments. As of 30th of September, the unrecognized profit or the unrealized gain on our listed investments stood at 1,96,344 crores of rupees. Capital adequacy as of 30th of September stood at 20.7%, which is a combination of 19.5% Tier 1 capital and 1.2% Tier 1 capital. Now, obviously, the capital adequacy numbers have been strengthened or further strengthened by virtue of the capital issue which we had done in the month of August. Non-performing loans in the aggregate stood at 1.81%, and as of March 20, this number has stood at 1.99%. Individual non-performing loan numbers stood at 0.84%, whereas on 31st of March, this number was 0.95%. So there is a roughly 11 basis points improvement. Non-individual non-performing loans stood at 4.19% compared to 4.71% on 31st of March. But let me say this is after taking cognizance of the Supreme Court ruling regarding the fact that we should not add new non-performing loans or disclose new non-performing loans during this period. Had this not been done, then the individual non-performing loan number would have been higher by 4 basis points. In other words, the 0.84% of individual loans, would have gone up to 0.88%. Non-individual loans would have been the same. And in the aggregate, non-performing loans would have gone up from 1.81% to 1.83%. Based on the Supreme Court, based on the ruling, the RBI ruling on classification of assets and the moratorium being provided, had this moratorium not been provided, then the asset classification would have changed by about 7,900 crores. Total ECL charged to the profit and loss account stands at 1,635 crores during the 6-month period, of which 436 crores relates to the second quarter of the financial year. The total balance we carry in our provision account stands at 12,304 crores. And from a regulatory perspective, if we make provision for standard assets and for non-performing loans strictly in accordance with the numbers which have been prescribed by the regulators, then the total provisioning that we would have needed to carry was 5,621 crores. And I repeat, against that 5,621 crores, we are actually carrying a provision of 12,304 crores. As you know, COVID has significantly impacted everyone's lives. And taking that into account, we made additional provisioning for COVID right through the quarter ended March, June, and now September. And the total provision we carry for COVID stands at 1,200 crores of rupees, of which 284 crores relates to the current quarter. Net interest income for the quarter stood at 3, and this is only interest without taking into account the upfront profit that we are required to book under Ind AS accounting for sale of loans, just pure interest. The total net interest income stood at 3,647 crores for the second quarter, compared to 3,022 crores in the corresponding period in the previous year, giving an increase of 21%. If you look at the 6-month period, the total net interest income stands at 7,039 crores for the 6-month period. During the quarter, we sold loans aggregating to 3,026 crores of rupees, compared to as much as 7,160 crores in the second quarter of last year. And consequently, as required under Ind AS accounting, we have to book part of the profits upfront, and the amount of profit that we have booked this year is 159 crores compared to 264 crores in the second quarter of last year. If we add the securitization income to the net interest income and then calculate the NII number, with some analysts do, then for the second quarter, the net interest income would have been 3,806 crores rupees. Net interest margin for the 6-month period stands at 3.2%. And if we look at only the second quarter in isolation, it is up by 10 basis points to 3.3%. Spreads remain more or less the same. Our spreads during the 6-month period stood at 2.27%. If we look only at the second quarter, spreads were 2.28%. Now, profit on sale of investments this year or this quarter has been zero. We have not sold any investments whatsoever. In fact, we booked a 1 crore rupee loss during this period. Last year in the second quarter, we had booked a profit of as much as 1,627 crores during the second quarter. If you look at the 6-month period, then the profit that we have booked in the 6 months of this year is 1,241 crores of rupees compared to 3,521 crores in the previous year. If we look at dividends, so therefore there has been a significant reduction in the amount of profit on sale of investments. Similarly, as you know, Reserve Bank of India told banks that we should not pay any dividend, and similarly, the insurance regulator told the insurance companies that no dividend should be paid till further notice. So therefore, the dividend that we would normally have received has not been received in the current year. If you look at the second quarter of the year, the dividend that we have received during the 3-month this quarter has been 323 crores of rupees compared to 1,074 crores in the second quarter of last year. So if we look at the reported profit before tax, the reported profit before tax stands at 7,139 crores for the quarter, which is lower than 8,500 crores of the previous year. But the reason why it is lower is because of the fact that last year we had such a high amount of dividend income and we had such a high amount of profit on sale of investments, which is not there in the current year. So if we adjust for the profit on sale of investments, if we adjust for the dividend, if we adjust for the excess ECL that we did, if we adjust for the fair value gain on investments, and if we adjust for the stock option charge, then the profit for the quarter would have been 3,366 crores of rupees compared to 2,646 crores in the second quarter of last year, after removing dividend, after removing profit on sale of investments, and after adjusting the ECL provisioning. And in that case, the profit growth, so the adjusted profit growth on a pre-tax basis is 27%. Tax for the quarter stood at 662 crores of rupees compared to 569 crores last year, giving us a post-tax profit for the quarter of 2,870 crores of rupees, and for the 6-month period of as much as 5,922 crores of rupees. If we look at the consolidated profit after tax for the second quarter, the consolidated profit after tax stands at 9,094 crores of rupees. So that is a very brief sort of a summary of the results for the second quarter of the year. A few questions I've already received. So one question that has been asked by someone is what is the reason behind the dip in profits? So I've already explained that in my presentation, that there is in reality no dip in the profits. In reality, profits are higher than what they were last year, and that too by a significant number. It is higher by as much as 27% compared to last year. After you remove dividend income, after you remove profit on sale of investments, and after you remove the ECL provisioning. ECL provisioning doesn't really make much difference because it is more or less the same. So in reality, there has been no dip in profits. Second question is how has collection efficiency panned out for HDFC in September after the moratorium was lifted? So after the moratorium was lifted, the total collection that we had was 96.3% of what was due. What would be the outlook on growth for the rest of the year? Well, if you ask me honestly, my personal view is that this is really the best time for a person to buy a house for 3 reasons. Firstly, in my view, interest rates are as low as they will get. I personally think that it is very unlikely that there will be further reduction in interest rates from where we are. Secondly, if we look at certain states have given special incentives. For example, the state of Maharashtra, which houses 4 of our branches, Mumbai, Pune, Nagpur, Nasik, has announced a reduction in stamp duty if the property is registered before 31st December. So as against a normal stamp duty of 5%, the stamp duty stands lower to 2%. And the third reason is that in these times, we have seen that many developers, if you go and contact them, they do tend to give some discount on the price that they are offering. So a 3%, 5%, 7% discount to the price is something that we've seen in several cases. So given all of that, my sense is that this is the best time to buy a property, and that is also reflected in the fact that our loan approvals and our loan disbursements for the month of October, which is after all these measures were announced, has been one of the highest we've had. In fact, the disbursements we made for the month of October was the second highest disbursements we have ever made in any month in HDFC's history. So that shows the appetite in the market. And fundamentally, structurally, as I've always said, the demand for housing in India on a long-term basis is always going to be very strong. One is because housing is affordable compared to the average income of a customer. Two, the government has given a lot of incentives for people to buy houses, whether it be fiscal concessions, whether it will be the cash, the CLSS scheme of the government. So there are various incentives which are there. And thirdly, India has a young population. Two-thirds of our population is below 35 years of age. And unlike the West and India, people do not go to buy a house when they're in their 20s. So the average age of a first-time home buyer in India is about 38 or 39 years. And with two-thirds of the population being below 35 years, what it really means is that two-thirds of the population has not even thought of buying a house. But over the next 1, 3, 5, 7, 10 years, all these younger people will get to an age where they will necessarily have to buy a house. So there will, to my mind, be a structural increase in the demand for housing and therefore housing finance in India. And lastly, of course, is the fact that the penetration level of mortgages in India is extremely low. Restructuring, how many people have applied so far? The number so far is not very high, but these are early days. I don't think one should go by that. There is a time given. We need to wait and watch what kind of restructuring would happen. Very difficult for me to hazard a guess, but I don't think it is going to be something which is going to be very high, but that's my view as we stand today. How do you explain the growth in business and trends? I've already talked about growth in business. Margins, well, margins improved during the quarter. Our net interest income, I already explained to you, was up by 21% on a standalone interest on interest basis. And if we look at the net interest margin for the quarter, it stood at 3.3% versus 3.2% in the previous year. Collections in September also I answered. I told you that after the lockdown was removed, we had a 96.3% collection efficiency. So these are the questions which have been asked. And if there are any further questions, would be happy to take it up later on a one-on-one basis. Thank you very much. Thank you.